Hey, my name is Danielle Shay. Welcome to the first edition of Traders Code. I'm the VP of Options at Simpler Trading, and I'm also a directional momentum options trader. You'll also find me investing in long-term stocks, which I talk about on Fox Business and CNBC. I first got into trading because I wanted to find a way to stay home with my young son. I was a single mom by choice. I left my fiance and I decided that we needed to make our own in this world. And what I ended up doing was getting into trading. Why? Well, it was because of my dad. Thanks, Dad. My dad suggested that I learn something called the squeeze. I was home with him and my newborn baby, and I was trying to figure out my next move. I walked into my dad's office and I heard this voice coming out of the computer. It was really charismatic, but I didn't understand really anything that he was saying, and it was the voice of John Carter. But what I heard was that he was talking about the squeeze. The squeeze is a pattern that you can learn that you can use to trade directional options. And for me, like I said, I had no idea what options trading was, but I was intrigued because I wanted to be able to find a way to stay at home and work from home with my son. And that is how my trading journey began. Now, 12 years later, here I am talking to you. I'm in New York this week, launching my podcast. I went ahead and visited Charles Payne yesterday on Making Money, and I'll be heading to a few other TV studios this week. So anyways, what I wanted to do throughout the course of this podcast is I wanted to share with you some of my favorite trading tips that I have learned throughout this journey. I also wanted to share some of my favorite trading setups because, for me, it's all about learning patterns. When I first got into trading, let me tell you, I found it to be extremely difficult. However, the thing that really saved me was focusing on identifying patterns and focusing on identifying my overall goals and what I wanted to do. I knew that my goal was to be able to stay at home and work with my son because I did not want to put him in daycare, and I also didn't want to have to be away from him all day long. So what I did was I dove straight into identifying patterns and first learning the squeeze pattern. So let me go ahead and start off by telling you what the market's doing right now and what I'm seeing. Because I am a technical analyst and I also read a lot of earnings reports as well. So I have a little bit of on the fundamental side too, but the base here is always a pattern. So let's start with that. Let's start off with the NASDAQ. The NASDAQ is my bread and butter. That's where I identify a lot of my trades. I love trading Magnificent Seven names in tech stocks. And it's because these names, they have a lot of great movement in the options market. And they're also highly optionable. So looking at the NASDAQ right now, what we see is that we had a really nice pullback in August. We had a pullback, August 20th was the low. And from that moment, stocks have been bouncing really well. We're in a nice bullish trend. You can see that overall, buyers are coming in. As a trend follower and as a pattern follower, that's exactly what I love to see. So when I see those nice pullbacks in the market, I like to jump on that trend. Now, something else that I'm looking for right now is not just trend following, but also identifying consolidation that's ready to break out. That's what we call the squeeze. But there's another kind of special squeeze that I love to look for, and this is a pattern that works really well when we're at or near those previous all-time highs, which is exactly where we are in the market right now, and that is going to be the short squeeze. So the short squeeze is a pattern that sets up when you have a stock that has higher than average short float. So what that means is that there's a large number of traders that are betting against this stock. When you have a large number of traders that are betting against the stock, and then for some reason there's a catalyst and that stock breaks out, that's where we end up seeing what we call a short squeeze. It's where the short sellers have to buy to cover to get out quickly. And then also you typically have momentum traders like myself coming in and buying the stock, which pushes it higher and causes it to explode. So I'm looking for a combination of things right here. I'm looking for number one, the regular squeeze, which is where we have consolidation that's ready to break out. And then on top of that, we have tickers that also have high short float. So when you combine these ideas, especially when you have a market that's near previous all-time highs, this is where you can get some really big movers. So let's talk about a few examples from this week. Earnings can be one catalyst that can cause a stock to break out. So for example, we had Kohl's report earnings this week, and we had Build-A-Bear Workshop. Now, both of these stocks are retail companies that have a lot of people betting against them. And they don't have to have this amazing earnings report. They just have to have something that was better than expected. So both of these companies exploded after earnings, and that caused a little bit of a short squeeze. So what we want to do as traders is we want to look at these patterns, and then we want to identify tickers that could do that in the future so that we can be along for the ride, right? So right here, I'm going to give you 3 patterns right now that are setting up that I think could be potential short squeezes. So let's go ahead and take a look. The first one is going to be OKLO. This is one that I've been trading in and out of this summer, and I think that it's setting up again. Why? Well, because currently right now it's trading at 78.86, and the previous high was at 85.34. So we're pretty close to that previous high, right? And what you really see with the short squeeze is you see it take off when you're approaching that previous high, but then if you can get enough volume in the stock for it to break out above that high, that's where it will explode. And that's because that's typically where the short sellers give in, they take their stops, they have to buy to cover, and it explodes. Now, I like this pattern for a couple different reasons. Number one, it has a bullish trend. Number two, it has momentum. It's up 7.68% today, so some really nice momentum and volume coming in there. It has the regular squeeze, and then it also has a short float. So if you look at the short float, 16%, it's pretty elevated. Typically, I'm looking for 10% or more. Anything that has 20 or 30% is a huge amount of short float, but I'll take 16% for sure. So first tip, OKLO. Next one is going to be RGTI. I like this one because it's in the quantum space. So you have a lot of attention surrounding that, so that can definitely help short squeezes. But it also fits my other criteria. It has a regular squeeze, and it's also near previous highs. Now, right now, it's trading at 17.05. I would say the most recent high is at 18.26, so pretty close, right? If you look a little bit further back on the chart, you'll see that we have a high at 21.42. That's a spot where I would expect it to really get going. So I like this one. It's up 10.62% today. I think overall, this one looks pretty good. Now, I invested in this one on a long-term basis in my son's account. And then also I like it on a short-term basis for trading long options. Now, let's go ahead and look at the last one, RBRK. Now, if we pull this one up on a chart, what you'll notice is that currently right now, as of this filming, it's up 5.87% today. Now, you might be saying, Danielle, why are you picking these names that are up so much today? We could have had a better entry at another time frame. Well, yes, that's true, and you do typically want to get in before a stock is up 2%. However, with a lot of these short squeeze names, what I will see is that when they start taking off like this is when they're really getting ready to go. So while an entry on a pullback would have been a better entry, at the same time, sometimes these stocks can squeeze forever, and you're just waiting and waiting and waiting for it to come through. And so sometimes once the volume and momentum takes off, that's when it's actually ready to go, and you can get a pretty quick trade out of it. Now with RBRK, the previous high is going to be at 103, and you're trading at 92.67. So again, you're pretty close to that value, and you have earnings coming up on the 9th. Now that's something that I also like to look at for an additional catalyst, because a lot of the time what you'll see is you will see tickers like this rallying going into earnings, and oftentimes like Kohl's and Build-A-Bear Workshop, they can actually explode post earnings. So Those are 3 tickers that I'm trading right now. They're on my watch list. Love those short squeezes because, like I said, I'm a directional momentum options trader. And also, I wanted to let you know that as a directional momentum options trader, I am writing my first book and it's going to be published this fall. So make sure you check it out. I'll be talking about it on the show. This book is called Sharpen Your Trading Edge, 10 Steps to Master Directional Options Trading. And it's going to be my exact 10-step process that I have created over the course of my trading career. So I'm really excited about this. This is something that I've been working on for a long time. And I hope you'll find it helpful because you know what? If it weren't for people before me that helped me, I would never be where I am today. So as a part of this, what I wanted to do is I wanted to bring on my first special guest, which is my son, Leo. Now, he's the reason why I got into trading to begin with, and I just felt like this is a perfect moment in time to bring him on and have him ask me a few questions about why I got started, how I got started, and how things have changed for us. So let me go ahead and take a break, and I'll bring him on, and I'll see you in a minute. Hey, it's Danielle, and I'm back here with my son Leo, and this is his first visit to the New York Stock Exchange. I thought it was going to be fun for him to interview me, so let me go ahead and turn this over to him, and he's going to ask me a few questions about how I got started trading, why, and what we're going to do moving forward.
So, starting trading at home sounds pretty risky to me. What were you thinking?
Well, you know, I thought it sounded pretty risky as well, but it was, after all, Grandpa that suggested it. And Grandpa is a very calm and steady presence, and he's very responsible. So I figured that if Grandpa was suggesting to do something so crazy, then it may be a good idea.
Yeah, that's pretty cool. Being here at the stock exchange is pretty cool, but how is it different from trading at home?
Well, you know, when I first started trading, you were a newborn, and well, it was quite interesting because I would have my laptop there. I was working from home. I was pretty broke at the time, so it took me a while to get proper trading equipment. So that was one thing that was massively different, right? So I actually ended up getting my own laptop. I finally got a nice phone after I had a nice Apple trade, so that was cool. But, you know, I think that the main thing is that when I was working at home, when you were a baby, I could be there with you. So you were actually a pretty needy baby, and you didn't like it when I went too far away from you. And I tried to get a job. But you were not very happy about that, and you would be upset when I would leave and you didn't want to drink your milk. So it was very problematic for me as a mom. So I ended up staying home with you and determining that I was going to make a go at this whole trading thing, and I decided to, you know, keep doing it and never give up, and that was how we got to where we are today. So pretty cool, huh?
Yeah.
Yeah.
Who are some people that inspired you to start trading?
Well, you know, definitely Grandpa. Grandpa's been investing for a long time, and he loves trading. And then also, of course, John Carter. So when I first started trading, I was trading at home by myself, and I was learning online. So I joined the Simpler trading room, and that was something that I would do while you were running around the house acting crazy. You know, I would always make sure that I would listen to the market open and the market close sessions that they were putting on in the trading room. And what I did was I was practicing with paper money at first. So paper money is just fake money that you can trade with. And so in the very beginning, because, you know, we didn't have a lot of money, I practiced with that until I was confident enough to put real money at risk in the stock market. And so after a while of doing that, learning various strategies, learning how to follow the trend, what I ended up doing was I started to trade with real money. So it was a great experience. It was not easy to work from home with a baby. I learned very quickly that day trading was not for me because it's really difficult when you're getting interrupted by a child and you're trying to do really short-term trades. And so that actually really helped me evolve my trading style, where I'm primarily a swing trader and I trade really the market open and the market close, but I don't usually trade all day long, and I usually hold on to my trades for several days to several weeks. And so that made my trading style more flexible towards having a family.
Sounds cool. What is the biggest win you would say you've had in trading?
So I think that the most monumental moment for me was when the pandemic happened, and we really wanted to get out of the city. And what I was able to do is I was able to use some of my trading profits to put a down payment on a house. And so what we ended up doing was we bought a house by the lake house, I'm sure you know. That was the first time I was able to buy a house, which I was really excited about. And I don't know, for me, that was kind of a full circle moment because we went from not really having a place to live to being able to, afford our own house. And then also, of course, that ended up building equity in the long term, and that ended up growing money because when you take your money and you pay for a house, especially in this case because it was 2020, the house went up in value and then we were able to sell it for more than we bought it for. So being able to use some of that trading money to be able to do that and then grow that equity and earn more money that way, I mean, for me, that was the monumental win that we had.
Sounds good. How would you say your trading has changed over the past few years?
Well, in the beginning, as I was mentioning, I really felt like I needed to be a day trader because I was trying to focus on making a certain amount of money every day. But I learned very quickly that that was just not the way to do it. And so what I've really tried to do is I've tried to structure my trading around family life. So for example, the market close is a perfect time for us. Luke is at preschool, 2-year-old. And this is a great time for us as far as our family is concerned for me to be putting on trades because we live on the Pacific coast, and so it's from 12 to 1 o'clock. And so my trading strategy has mainly evolved to focus on earnings trading, a lot of momentum, high volume trading. And you can really see that momentum and high volume coming through the last hour of the day at market close. And so I like to put on a lot of my trades at that moment in time. And I don't really do a whole lot during the middle of the day because I'll do shows and stuff like this, but then we also have to do doctor's appointments and go do things at school and things like that. And so I've really adjusted my trading style to fit our family lifestyle.
Yeah. That last hour is very important to you. I learned that over the last few years of homeschool.
Yes, that's right.
Yeah. What would you say about someone who wanted to know what would you tell someone if they said they wanted to have their trading evolve around their family?
Well, I would say that you need to find a mentor that has a trading style that you can vibe with, and that's something that you feel like you want to learn, because there are so many different trading strategies. You can trade extremely short term, scalping. You can day trade. There's a lot of people that don't like to hold positions overnight. So for some people, maybe they can day trade 2 or 3 days a week and that works for them. For me personally, I like swing trading, especially just overnight trading, because that's what fits my lifestyle. But the moral of the story is really it's important to identify with mentors that have specific trading strategies that you find interesting and try to work on one strategy, focus on that strategy until you can nail it. Because oftentimes what a lot of beginners do wrong is they try this and then they try that and then they try this and then they try that. And because they're not focusing on one specific strategy, they can't ever get it right and they give up before they really give it a good go. So I would say find one specific area of focus and work on it and don't give up.
That's great.
Cool.
Great advice.
Yeah, thank you. Well, I really appreciate you joining me on the first episode of my podcast. You did a great job, and I really appreciate the fact that you got me into trading. So thank you.
Yeah.
All right, love you.
Bye.
All right, now for the next segment, I'm going to bring on Jeff Hirsch. He's absolutely amazing. We use his work with the Stock Traders Almanac in our trading room at Simpler Trading on a regular basis. I love trading seasonality, especially moves going up into earnings season. I love trading the December Santa rally, the January effect, and more. So during the next segment, stick around because he's going to be here and I'm going to be asking him all kinds of questions about his top strategies. Danielle, welcome back to Traders Code, and I'm so excited that I have Jeff Hirsch here today with me, and he is the editor-in-chief of the Stock Traders Almanac, which, by the way, I absolutely love, and we use at Simpler Trading all the time, and also the CEO of Hirsch Holdings. So thank you so much for joining me, Jeff.
A pleasure to be here and honored to be part of the inaugural show.
Thank you, I really appreciate it. So, Jeff, you have been a Wall Street veteran for 35 years and took over the Stock Traders Almanac from your father, Leo Hirsch, in 2001. Can you share the story of how he founded the Almanac in 1968?
Yeah, he actually founded the company in 66.
Wow.
It took him about a year and a half to compile all the data for the Almanac, using the Barron's Lab pages in the old days. But he, was in the Army, got into the piano in the officers' mess, and started writing music. And his cousin, Sam Kozlow, was a songwriter. He's in the Songwriters Hall of Fame. He produced Copacabana, and Yale had gone out to Hollywood to work with Sam. And then back in New York, he was in the songwriting, music publishing business. And Sam had sold his publishing company to RCA years ago for stock. Stock went down, lost money. He became a student of the market. And we named our first son Samson after Samson Kozlow. He wrote My Old Flame, Cocktails for Two, so pretty special guy. And he had this idea to put a company together called Indicator Digest, this newsletter that would compile all the indicators and patterns, and it was out of Palisades Park, New Jersey, and I think it was 61. Sam runs one of these ads in Barron's, the old A/B split, where it's like two headlines, so you could test, the results. And the ad hits. It was the old tear-off coupon, mail it in kind of stuff. And he calls up Yale, who, he had been working with, tangentially, whatever, and said, Yale, I want you to come run operations for me. So after a couple of years, Dad gets this epiphany to take all of these market cycles, patterns, trends, indicators, and put them together in a calendar format so he can follow the market schedule along with his own, and the Almanac was born.
Wow, that's amazing. I love that. It's such a great book. And, I heard that the 2026 edition of the Stock Traders Almanac is the 59th annual edition. Congrats.
Thank you.
Yes, I hear it covers everything from the presidential election cycle's economic impacts to why the midterm years are the bottom picker's paradise. What new insights or updates are you most excited about sharing?
Well, I think the big thing about the midterm year and the bottom picker's paradise is, again, a Yale phrase, a Yaleism. We got this sweet spot of the four-year cycle in there, which is sort of the crux of the four-year cycle, where presidents come in, after they're elected, they try to take care of things very quickly. We witnessed that, in manyfold this year with President Trump, and you can see how the cycle happens. The post-election year has gotten better. That's this year, 25, because it's sort of a pre-election year to the midterm year, where they're trying to get things in a good place for people to vote more for their party in the midterms. We'll see how that happens. But then in the midterm year, things kind of come home to roost. and we tend to see this Q2, Q3 of the midterm year is the weak spot, which we saw in 22 pretty clearly, and then that sets up this sweet spot, which is the 3-quarter combo from the Q4 of midterm year to Q2 of the pre-election year, and it's up about 30% for NASDAQ, like 29.2 or something, and S&P and Dow are up 19-20% for that 3-quarter period. It continues to prove it's one of the most consistent patterns of the 4-year cycle, and it's just something we're pretty proud of. And also, we've brought back, I know you'll appreciate this, the best books, best books of the year. I have about a half a dozen in them this year. I'm not going to say which ones are because the book's coming out, but I think your new book, which I've heard about, may be candidate for the 2027 edition. We'll have to get a copy and read it.
Oh, wow. Well, I love combining momentum and directional options trading with your seasonality. I do a lot of running into earnings, those kind of trades where I'm looking at tickers specifically that rally before an earnings report. And so when I can combine that with your seasonality, it tends to work out pretty well. So I really appreciate your work. We like to combine seasonals with other aspects as well. I think you get a few, especially technicals and some fundamental stuff. There's one other thing that I want to mention that's sort of part of the sweet spot, but there's another thing Yale discovered, that there's this huge move from the midterm year low to the pre-election year high of about 50% or so for the Dow. NASDAQ's even more. And that's a whole part of that 4-year cycle, and it sits right in there with the best month seasonality thing. So those are the main real impactful things for the 2026 Almanac. Oh, great. Okay, well, thank you. I love looking at the longer term view, but I also really appreciate in the Almanac how, it's a calendar format. Can you tell us a little bit about how you recommend traders using the Almanac's calendar format for day-to-day decision making? Well, one of my favorite things is when I meet people out at conferences, events, and they come up and show me their book, and the diary pages here, they're just covered in notes. So that's why we leave all this space here. So when people use it, they make your notes. I mean, if it's you got a haircut, or you got to drop your kid off wherever, or I'm going to buy NVIDIA earnings, or whatever it might be. So write things down. Look in the back of the book where there's some of the old school battle for investment, survival investment checklists, and how to profit from your own mistakes and keep track of recommendations, and then just track the patterns along with the calendar. And people look, day traders will look at the bullish and bearish days that we have in there and the probability numbers. And one of the things that people make a mistake with sometimes is they just pick that one day. And what we really like to get people to do is look for clusters of bearish or bullish days. A lot of them around turns of the month. October and November is pretty strong bullish period. When you see a cluster of 4 or 5 days with 3 or 4, bulls in there, or a string of them in a row, or a string of weakness, in a row, that's the kind of thing you can use. And then, there's the best 6 months. There's the sector seasonality page, which dovetails well with other work that we had, like you did with momentum and other things. So that's a good way to and it just some of the quips in there, some of the quotes too. I find them inspiring. I took over the role from Dad to curate them. I look for them all the time. Hopefully, I'll continue to find witty sayings from people in the especially from the floor here. Yes. As the day goes on, or as the years go on. Wow, that's a really great tip. Yes, looking for clusters, that's really helpful. And that really leads me into my next question is, what's one underrated daily or weekly pattern that traders can overlook? My favorite is for day traders, and and even if you're a long-term or a swing trader and you're looking to take a position, there is, despite high-frequency trading and algo trading, there's that period of the day around 2:30 where the market tends to hit a low. I mean, not every day, and everyone knows about rallying the close and all that stuff, but there's that period. So if you're looking to pick something up, which I often find, it's a little up, I'm not getting my buy limit that or the price that I want, just wait till about 2 o'clock when everyone gets tired and they need to go out for a coffee or an espresso or a Diet Coke or something, and the market tends to sag there a little bit that period. So that intraday trading pattern thing, which is one of the first things I learned how to do, with a red pen and a little short ruler and the Barron's Lab pages, the daily half-hour ticks and an adding machine and graph paper. But it's amazing to me how that still persists, that there's that sort of mid-afternoon weakness around 2:30. And that's exactly why I usually come in after that and start my trading then, because I found just so many times, I want to find that momentum that happens the second part of the day, and it works perfectly for me with my family schedule because I can, do something with the kids for lunch or whatnot, and then come in and find some moves into the close. So thank you. It's a great tip. Let's go ahead and dive into the core of the almanac. So, sell in May and go away, very classic, right? But I read in your notes that you said you pair it with buying in October and the MACD timing signals. So I noticed we were in Orlando, I think, in October, and you called the buy perfectly. That was really amazing. So I would love to hear more about how you use this in October for timing those lows.
Well, everyone likes to say sell in May and go away. I like to say buy in October and get your portfolio sober. Just to have a little rhyme, it's really not sell in May. Everyone expects the market to go down then. It kind of goes sideways historically from May through October, a lot of chop. This year, notwithstanding, there's other more powerful forces there. But what we do come October 1st is we start looking for a MACD crossover signal. And on the buy side, we use the 817.9. Those are all daily MACD. And we look for a new crossover on both the Dow and the S&P and NASDAQ. NASDAQ has a best 8 months, which goes through June, which worked well for us this year because we stayed in past the April dip, which sort of washed out some of the best 6 months period. And we also, in addition to getting into the Dow, S&P, NASDAQ, Russell 2000, the ETFs, we will become more aggressive with stocks. And we run our stock screening basket, which is a robust screen looking for acceleration of growth in revenue and earnings sequentially year over year with good valuations, good technicals, and some relative strength, and some sort of off the radar stocks that are being underfollowed by Wall Street.
Oh, great. Yeah, I would love to hear about some of your current trades and ideas. I noticed that you wrote August sector trades and biotech. You also have SMCI, defensive plays. So let's go ahead and start with the sector trades.
Sector trades, biotech, infotech, and gold all come into season around August. Gold's been like a fourth quarter seasonal trade for years. It was an old almanac. It used to be fourth quarter ASA gold was a page from the old days. And we try to get people into them early. We're looking for a little softness, get in at a low point. I know you like to pick up things on dips as well. Doesn't always work, but XBI, IBB, IYW are all some of the trades. The GDX, the GDXJ, the junior miners, plus GLD and SLV. They're all in the newsletter portfolio. And with SMCI, right now we're kind of quiet with picking stocks because it's our seasonal week period, though the market's very strong, which is a bullish indication in and of itself. We're bullish for the year, but SMCI was one of the stocks that came through our screens back in November 22. We've sold half at a double twice on that.
Nice.
So we're sitting there. I got back into it myself under 47 here. We think it got some potential. It's part of the whole data center tech stack. There's some pushback here with some of the NVIDIA earnings and some of their recent misses, but we think that it's part of the future there for the data center build-outs.
Excellent, great. And then what about the defensive plays? So are you still looking for those September, October?
Yeah, we're still in some of the short-term bonds. I hold some of the SGOV just for the worst 6 months trade. I switch back and forth as per the system. I eat my own cooking there, and we picked up some of the European ETFs, some of the value dividend ones. There's a host of them there that are doing well. So I think Europe's shown itself to be performing well. So we'll stick in that, and I'm still concerned about some potential downdraft. Nothing major in September. September's been down, 10 of the last 18 post-election years. I've done a little recent look at, July and August being up more than 2%, which we're still not done with August, but it looks like it's going to be greater than 2%. You see weakness in about 8 of the 11 years for the S&P in September, and then 7 of 11 in October. So there's a potential for October phobia and a third quarter correction, but I'm still, my best case scenario, which we put out last December in 24 for about 12 to 20% is becoming more and more, the odds keep increasing for that best case. And I think we're going to end up with double-digit gains, save some sort of pullback in September, October that might be, who knows, the Fed may, not cut. GDP was pretty strong today, so I don't know what the push is to cut. I know everyone is expecting them to do it, and they're getting pushed from the White House, but inflation's been a core, especially, has been ticking up a bit. So there's a few things, maybe some other disappointment from the AI tech world, but otherwise, looking for another positive year up in double digits.
So you think the fourth quarter magic and the January indicator trifecta will probably be even better because we had a strong August, or?
I think the fourth quarter magic is going to happen because, we got everyone is a holiday spirit. There's money coming into the market. There's people, institutions readjusting positions, and that's part of the sweet spot as well. Which is in the midterm year, but generally, fourth quarter is better. The January trifecta is an indicator. Everyone says, "Are we going to have a Santa Claus rally?" It's really, as my father said, if Santa Claus should fail to call, bears may come to Broad and Wall. We had a down Santa Claus last year, the last 5 days of the year, first of the year, but up first 5 days, and his flagship January barometer was up about 2.7%, I think, for the S&P, if memory serves. And here we are with a positive year. So putting the three of them together, which is us standing on Yale's shoulders, when all three are up, it's 29 of 32 years, the full year is up 17.7%. And we didn't have that this year, but we had two up. So if one's down or two are down, it sort of takes away the results a little bit. And the February, post-January to December gain it's one less. It's 28 of 32 years, and it's about 12.6% for the year. So we've got, some of that going for us here, but we'll see what happens, I expect the fourth quarter to be strong. And the other thing with my post-election year seasonal patterns, and I combined, before you were asking about the decennial pattern and the 4-year cycles, we've got the fifth years, which are the strongest, 0 years are the weakest. Fifth years, post-election years, and all years combined, our aggregate cycle, we are tracking up at the upper end of that, which is just, continues to increase the odds for the best case of 12 to 20% for the year.
Perfect. Well, that's what I love to hear. For me personally, when I go into the Santa Claus rally, since I love trading direction and momentum, I usually go into it bullish just because it typically is bullish. And, there are some years where it doesn't work out, right? But, and then of course we use it as your indicator. But generally for us in our trading room, as long as the technical patterns align, obviously, we try to trade that Santa rally starting December 26th.
Yeah, you could even try getting a little early. We find some of the last half of December working very well, even from Thanksgiving. I know, one of my friends, Larry McMillan, the options strategist, he has some trades in the Russells from, just before Thanksgiving through the Santa Claus rally. So there's other options there, and that's another feature in the book, the Thanksgiving to Santa Claus rally feast.
Yes. Is there anything else you want to tell us about the book or your newsletter? I realize you have stock picks in your newsletter now.
I mentioned a little bit of our stock screening methods, which we also, use technicals on top of that with the seasonality, the time of the year. But we're putting out a new basket in September, October, November to see when we get our buy signal. But if you go to stocktradersalmanac.com, you can get the Almanac free every year with a subscription. If you come in now, I think there's still a deal up there where you get the 25 if you don't have it, plus the 26, which is coming out earlier this year. And there's a little free trial thing. If you click on log in, you can kick the tires for 7 days and see what we're talking about.
Wow, that's great. Well, thank you so much for joining me. I love your work. I followed it for a long time, and I really appreciate you coming down to the NYSE for the first Traders Code podcast. And I'm looking forward to seeing you on your show.
Me too. Pleasure is all mine.
Great.
We're having some fun. Thank you.
Thank you.